Good afternoon. This is Phil Perlman with Yahoo Finance. I'm here at the MTA Symposium in New York City 2014, joined by Greg Harmon, Dragonfly Cap, proprietor, CEO, founder, everything, right? You have a new book out.
I do have a new book out, yeah, called Trading Options.
And why don't you tell us a little bit about it?
Well, it's about my life, really. It's about my life as a technician. So I have a process that I go through continually, every week, every day even, where I am a top-down technician. I take a look at the trend to determine what the trend is doing, then use that to determine what kind of stocks I want to trade. And then the twist on that, following that, is that I then apply an options overlay to it, so that I'm putting options combinations on top of technical charts to manage risk and increase leverage in directional trades that I like.
And so I began reading it last weekend, and I was struck by two things. One, so this is your first book, right?
It's my first book, yeah.
You've been blogging for a long time, very regularly. This is your first book, and I could feel that you poured it out into this book. You put a lot into it.
I did. I mean, as I said to start, it's my life.
Right. So you're taking what you do and putting it on the page, basically.
It's totally about my process, and from soup to nuts, from the start of the day or the start of the week, Friday at 4:30, through till Monday morning when the market opens. This is my process, including things like how do I determine the right position size? How do I determine how much I'm going to risk on any trade?
And so we've known each other for a long time, and one thing that I've always been impressed at by your work is your risk management, and that also comes through in the book. Can you just say a little bit about the process of how you, before you get into a trade, you limit downside?
Yeah.
Huge element.
Yeah, there's the piece that everyone knows about in terms of finding the technicals and determining where the logical stop levels are.
Right.
But you need to take that a step further then and determine, based on your size portfolio, how much you're willing to risk then to be able to still be able to play the next day if you're wrong. And so that stop level combined with what's the worst case scenario that could happen, and your position size then is determined by what you're willing to lose in a trade. So if you're willing to lose 1% on any given position, your position size is going to be a lot smaller in something like Google than it's going to be in even Tesla or something like CVS.
And so you have to actually go and do something and make a new expression in the market to increase your risk or override the risk parameters that you've set when you get into the original trade.
Well, when I get into the original trade, I know how much I'm going to risk it in a worst case scenario. And using the options, I can create a worst case scenario.
That, right?
Yeah, whereas if you're just buying stock and you put a stop loss in, you could always see the market gap down and you'd lose a lot more than what you thought. But by putting the options overlay on it, you can limit that risk and define it.
What are you going to do for your second book? What are you going to do? You put it all in there. You left it all on the field, as they say in sports. Have you started thinking about that at all?
I haven't really started thinking about it. The book just came out 6 weeks ago.
Understood.
There's one piece of the process lift that I really haven't talked much about, and that's on a day-to-day basis. I also use a purely options strategy to trade earnings events.
Right.
And there may be something there. I'm not sure if it's enough for a book, but that's maybe the initial phases of the possibility of a second.
Fantastic. Phil Perlman with Yahoo Finance here at the MTA conference with Dragonfly Capital's Greg Harmon. Adios.